today, the theme of what I'm going to talk to you about is also about the progress that we are making towards our vision. The purpose of coming here is obviously to talk about the half-year results. But you as the audience, as shareholders, financiers, stakeholders in our business, we need to take you with us in terms of what it is that we are doing to make the business better, and also to see where some of the results that we are sharing with you come from, you know, and that we are not just talking about the things that we want to do or become, but actually doing it, because we are in the food business. It's serious business, as everyone knows, and we need to do real things that actually make sure that we'll be able to feed people. Where do I point? Here, yes. This is just, we said all the time, we always need to, it's almost like when you get on a plane, there's always stuff that they have to say in order for the flight to get to where it's going. And for us, it's our vision, again, to be a safe, healthy, and respectful workplace. You have just heard what we are doing on the safety and health side of things. A beautiful estate. I think if you haven't been to our estate, or if you were last there 12 months ago, if you come there, you'll find that we've been busy to actually make it a beautiful estate. The key thing, really, at the end of the day, is that we want to be a diversified business, but that's not enough. A diversified business which is the best at serving customers and consumers. So today, that element of being the best at serving customers and consumers is the one that I want to focus on, so that when we talk about our financial results, you can increasingly see where they emanate from and what we are doing to make sure that we can actually be the best at serving our customers. Our vision and our mission are kind of interlinked to some degree. So as we move towards our vision, you also see that we're addressing the elements of our mission, which is to make safe and high quality food that is abundant, available, and available for consumers. So you will see all those elements coming through as I go through my presentation. We've taken some money from you. We use manufactured resources. This is equipment, factories, and all that. Human capital, which without it, nothing happens. Intellectual capital, you know, things like brands and other intellectual capital that you might own, secret formulas to make stuff. Natural resources, I think for us, goes without saying. That's why Eugene spoke about the weather. So we start with the climate. The favorable climate in Mazabuka is what grows our crop, and the fact that we are warm throughout the year means we are able to grow sugarcane. We also use water, we use land. And then social capital, we have to be welcome in the community in which we operate. If you are not welcome in the community in which you operate, you can't even run your business. You need to have relationships with people that enable you to do business. Then once you have those things, you design a business model. And our business model is we need to grow part of our sugarcane. So let's just call that on cane to avoid the technical term which we use, which is called MCP. But I just thought that that would confuse a lot of people. We then also buy about 50% of our cane from growers. And what that means is that the agricultural risk is shared. So we as a company don't take 100% of agricultural risk ourselves. It's actually shared with growers. And as a business model, it actually makes your business resilient, because you can imagine if you're a business that's taking all the risks yourself, to the degree that risk taking requires certain elements and all that, if for some reason you start failing, the whole business fails. So there is an element of kind of risk diversification by virtue of us splitting the risk between us and the growers. But within the grower community as well, there is risk diversification because each farmer is different. So you actually have 17, 18 different businesses. And if one fails, we still have 17, and so on. So there is an element of diversification that is in the cane supply itself.
If you look at where it all begins in the fields. So what happened with our cane? If you remember so well, in the 2023-2024 rainy season, we experienced a drought. So the cane that we have been harvesting now is the cane that was growing at the time. As you would appreciate that the cane is a 12-month kind of agri-product. And so the cane that we're harvesting now, which we've been crushing, is the cane that was impacted during the drought period. So you then naturally expect that you are going to have a drop in the yields. And so this is a drop that you're seeing in terms of cane supply, which is a 31% drop in cane supply. And so effectively, because that is where it all begins, you also naturally expect that as you take that to the factory, then also the production number is also going to drop. So that is the 32% drop that you're seeing in terms of our production number. And so this is a reflection of how impactful the drought has been on our business for this year. But again, it's also important to contextualize the fact of, yes, there was a drought, but what did Zambia Sugar do about it? If you look at these results, we could have actually been a little bit worse off if we had not taken agronomic interventions. And so if you actually look at the recovery that you expect to see next year, is that part of it is actually showing us that the contribution that is coming as a result of what we've been talking about when you hear about the new farming system is that it's giving us an upside of 15%. So in other words, we could have actually been worse off. We could have been at about 85% of what we've had as delivery if we had not taken those measures that we have. So yes, as much as we have been impacted by the drought, but because of our own interventions, we are far better off than what we could have been. So coming to now refined sugar. As you again appreciate, is that refined sugar is obviously at the end of the spectrum, because then you would have produced your raw sugar and then you get to the refinery. Now it's important again to contextualize the drop that you're seeing, which obviously has got also an impact on one of our customer segments, which was the industrial customers that the MD initially talked about. So we had a drop of 23%. But where is that coming from? If you look at the total production, because we produce less sugar, you also expect that how much we're sending to the refinery is also going to have a drop. And you see also later, again, some deliberate interventions that we did for us to be able to cover up that drop that we had in the refinery sugar, so that we make sure that we still are able to satisfy the demand that is coming from our industrial customers. Because our priority, as we have always said, is that we want to make sure that the local market or the domestic market is fully supplied with sugar at every point in time. But we'll talk about that later. In terms of sales, we obviously had about a 7% drop that you're seeing there in terms of overall sales. But what have we seen from a domestic demand point of view? We have actually seen an increase in terms of domestic sales by about 10,000 tons. So that is, and you are going to see the impact that additional 10,000 that we sold on the domestic market, which is as a result of the growth that we've continued to see in the domestic demand, the impact that it's going to have on our revenue line. But what about our export? Of course, whenever our domestic demand increases, then our export market gets affected. So that is the drop that we are seeing in terms of our export, our export sales. And then ultimately, what does it mean for our top line, which is our revenue, the money that we make? Obviously, with a strong increase that we had in terms of our domestic sales, you also see a significant contribution coming into our revenue, where we have our revenue going up to almost 4 billion, if you compare with what we did in the previous year. And ultimately, in terms of operating profit, this we made just shy of 1 billion at 907, compared to the 1.3 billion that we did in the previous year. And operating profit, which was already announced earlier by the MD, is that we did 790, just under 800 million, compared to the 1 billion that we recorded the previous year. So again, if you check, these are strong results if you look at the impact that is coming out of the drought, because the drought did not only affect our cane supply, but it also impacted some of our top costs, which I'm actually going to talk about in the next slides. So, of course, it's important that we break down for you in terms of where's our money coming from, our top line, our revenue. So if you check, much of it is actually the contribution of about 710 is actually coming from our domestic market, which is what I talked about earlier in terms of the contribution that we had as a result of the increase that we had in our domestic sales. So we have a strong contribution that is coming out of our domestic market. Then I think there's a time that we got a question around molasses, that we never talk about molasses. And I think there's always been this assumption that we treat molasses as just one of those byproducts that we just sort of throw around and just give out for free. But that is actually not the truth. The truth is that we have fully commercialized our molasses value chain. And especially with the setup of the distillery that is close to us, where we supply them with the molasses, this has actually enhanced the value that we have actually been getting out of our molasses sales. And that is why you are seeing a 14 million increase in terms of the impact that is coming as a result of higher molasses sales, but also the favorable pricing. From an export point of view, the contribution, obviously you expect that, because we had a strong drop in our exports, and so you expect that obviously you're going to have that negative impact, which is about 157 million, which was a drop in terms of the contribution if you compare the last half year to this year. But obviously, because of the exchange rate, we saw that there was a favorable contribution coming out of FX, which is about 76 million upside when you compare year on year, because of the depreciation, almost about 23% depreciation of kwacha, against obviously the major convertible being the US dollar. So this is what our revenue increase is all about in terms of where our value came from. So we continue to strongly treasure our domestic market, and we'll continue to prioritize it so that we make sure that there's all those dots that you saw across the country, that there is consistent supply across the country at any given time. In terms of profit, so now this is where it's important to understand the impact that it's had, not just on our cane supply, but also the impact of the drought in terms of our cost. So if you compare half year last year to this year, we've had our costs going up by about slightly above $1 billion. Where is that coming from? Now, it's important to again understand that as much as the drought affected our cane supply, it also affected, it wasn't just affecting the agri sector. Even our electricity sector was impacted. Talk about ZESCO. I think ZESCO have given more details about this. I don't need to reiterate their points. But important to say that we saw a 67% increase in our cost per unit for electricity. But this is in absolute price per unit increase. But now remember again, we had a shift from kwacha to dollar. Now we started paying in dollar because this is premium imported electricity. So again, if you look at in absolute total cost value, this almost doubled in terms of our cost. And I think for the first time, if you just look at agri as a segment on its own as a business segment, for the first time we saw the electricity cost going above our employee cost.
At this point, we all need to leave here with a slogan, which is, the future is bright. So indeed, the future is bright at Zambia Sugar. We'll take some questions before we can end the morning's session. If there are any questions from within the room, just to get clarification from what has been shared. If there's anyone with questions online as well, we'll take those. So we'll start with, if there are anyone with questions online or in the room. We'll take questions 3 at a time. Anyone with questions? We've got mics that will go around in the room. Please raise your hand and then share with us the institution you're coming from as well as your name. Thank you. Yeah, so you use the mic on your table.
Are you able to get me? Hi, this is Lewis Mosho coming from Bantam Capital. I just wanted to ask, when you say upgrade the houses, what exactly are you upgrading? And also when you say electrified, do you mean you have your own grid powered by solar or some other sort of electricity? Please clarify. Thank you.
Thank you, Lois. Anyone with questions?
I'm far away from the mic. I hope you can hear me. My name is Josia Funko from Zanaco. First of all, I just want to congratulate you on the performance. I know it was a difficult year. Like you said, I think it's better than expected performance considering the effects of the drought and the power shortage in the previous year. My question, I think Hezron touched on it a bit. I just wanted to get it clear from you. Like you said, production of sugar starts in the field. And as we know that during the drought year, obviously the yield went down, and you talked about the area harvested being reduced by about 23%. I wanted to know what the effect of the less rains had on the ERC. I think you touched on it a bit, because normally we expect it to go a bit higher. And what does that then mean for your cost in terms of your payment to outgrowers and the like? So what was the average ERC, and how did it translate to your cost and also revenue for your outgrowers? Also, if you can just touch a bit around the yield, particularly that you're seeing, or the yield reduction. Obviously, the rains affected the growth of the cane. So how much average yield did you see coming from there?
Okay, I'll ask Oswald to respond to these 2 questions.
Can you hear me? Yeah. All right, thank you for the question. I'll start with the question to do with electrified houses. So as we've got about 2 megawatts of power that comes from the factory that powers the estate, our 6 water treatment plants. So essentially, we can island ourselves from ZESCO and actually provide electricity for all the houses on the estate. So that's part of the benefit of our own estate model. Then in terms of upgrading our houses, I think we like to be forward-looking. If you looked at our houses now, they're actually better than some other houses elsewhere, but we are trying to modernize them. So all the houses, all the housing units do have all the wash facilities, but you find that for the ones such as for the irrigators, some of the toilets and the wash basins, much of they were flushable toilets, etc., they were outside, which to us we saw as a security concern. Some of the rooms, they meet the minimum standard of what a bedroom should be. So for us to say it's a beautiful estate, even if I'm an irrigator, a cane cutter, in our view, we needed to actually expand that. So we worked with NCC to now create a minimum standard that everyone would be happy with. So that's the upgrade we're doing. Thank you.
So a question from Joe from Zanaco around the yield. So yes, we saw a drop in our yield, a 9% drop. We were at about, if you look at half year, last year we were at about 111. We dropped to 101. So that is the impact of the drought. And like I mentioned, it would have actually been worse if we did not have the agronomic interventions that were put in place through the new farming system. In terms of the ERC, which is again works a little bit different, and that's why you saw our cost escalation. I said we use a division of proceeds model. So we do not really base it, per se, the pricing, based on how much cane is being brought, but this is what we do is we share our proceeds, which is the revenue. So if you remember, our revenue went up, so then you also expect that the ERC or the sucrose cost is also going to increase. So we paid more to the as a result of that because we use a division of proceeds or a proceeds sharing model. So I hope that answers the question. Yeah, sure. Yeah.
Yeah, so for me, when I came, I made a promise I'll be your teacher in terms of you understanding the sugar industry and its basics and what things mean. My people like to use these acronyms like ERC, and then you go away wondering what is this ERC? What does that mean? So ERC is estimated recoverable crystal. So if you look at sugar, you can see it's crystals, isn't it? You see crystals of sugar. So when you've got juice, sucrose juice that's coming out of the sugar, not all of it can be recovered. You see, so some of it goes through molasses. You can't do anything, just sticks to the molasses and is lost. Some of it goes with the bagasse, and some of it goes into the mud that goes out. So what you are then left with is an estimation of what was finally recovered as sucrose. So a grower bringing cane to us brings cane that has got what we call non-sucrose, or glucose, fructose, things that are not sucrose, which is what we make. So we can't pay them for that because we are not going to be able to recover it. They are also bringing cane that's got bagasse. So in an ideal world, you would say to the farmer, bring me 100% sucrose, which has got no fiber, no mud, and no non-sucrose. But in the world that we live in, God created cane as it is, but we then say, to be fair, we'll pay you for the estimated recoverable crystal or sugar. Hopefully that helps you to understand what ERC means. So it's really out of the cane that was sent, how much of that did we actually recover as sugar? And it's fair, I think, for you to pay for that. How does it impact ERC, for example? This is where you have a balance, because firstly, the drier the climate, the more sucrose you generally should get, But then what happens is, when it comes to the tons of ERC or the tons of sucrose that you are going to get, you've got a slightly higher percentage because it's drier, but then your yield is now 101. So the dryer, let's say it's 14.2% sucrose, and normally I get 14.1, but I had 14.1 of 111, and now I've got 14.2% of 101. So the net impact is usually always down because of the fact that the volume of can that you produce has a bigger impact than the benefit you get from dry weather. Hopefully that helps you.
Thank you very much, Oswald. Thank you, Hezron, and thank you, Collins. We'll take another round of questions if there are any. Yes.
Good morning, everyone. My name is Chiwala Daka from Absa Bank, Zambia. My question is directed at Hezron. I did note that in your very concise presentation, you did mention that the outgrowers account for about 50% of your cane. And I also did note that the drought had a significant impact on the supply of your cane. So I just wanted to find out, is there any specific support that you have been giving the outgrowers during the drought? And obviously because of the uncertainty that climate change is bringing, do you have any longer term strategies on how you intend to support the outgrowers? Thank you.
Thank you. Thank you very much. Another set of questions. Yes, Victoria.
My question is around whether the company is considering increasing their exports. I think it's appreciated that there's a dedication to supplying the local market and as a priority versus exports. However, I think Zambia Sugar also owes their shareholders a return, and I think arguably that's also a priority. So the question is, would you consider exporting more to get a bit more revenue? Because we understand that I think you export in dollars, so the revenue generated on the export market tends to be a bit better than the local market. So is that something that you see in the near future doing, especially given that your finance costs will go up in the next year? Is that something that the company is considering? Thank you.
Thank you, Victoria, from Stockbrokers. We'll take another set of questions. Yes.
Thank you very much. Victor Ntalasha from EcoBank. Thank you, Oz and Hezron, for that elaborate presentation. My question is, of course, from a consumer side and then also as a financier. Are we going to see some maybe conversations around pricing, seeing the tough year that it's been? Are we going to see the white spoon go up a little bit? Thank you.
Thank you. And as a financer, what's your question?
Of course, that is just noting that you need to pay the banks a little bit on the overdrafts.
Oh, I see. It's embedded in the one question,
exactly.
Right? Okay, thank you. So we'll take more questions. Anyone online with a question? Okay, so we'll have responses to those questions for now.
Yeah, I'll take the question on growers. So I did say that we share the agricultural risk, and I think it's only our growers are independent businesses, so we don't support them as you would not support your suppliers. They're a business that supplies you with a product. And the support you give them is that you are a market for them, and when they supply you with a commodity, you pay them. So that's really our primary obligation to our growers, is that we pay them as soon as they supply their cane, and we make the business of growing cane attractive because of the price per ton that we pay. But having said that, we actually support some of the smaller growers because they need expertise, they need guidance in terms of the best levels of inputs to use, and so on. So Zambia Sugar, as you know, is a learning organization. We have access to knowledge in terms of the latest methods of producing cane, producing sugar, and so on. And some of our growers do not necessarily have access to that information. So we do act as a source of knowledge and information to our growers. We also work with them in terms of advocacy to make sure that the policies and some of the things that happen in the government circles are favorable to growers. So there are various ways of support and collaboration, but they are primarily independent businesses. So growers were hard hit by the drought, even more so than Zambia Sugar, because they didn't have access to the premium power that we had access to. At times, power was available for only 3 hours out of 24. So you can imagine, irrigation systems are designed to apply water slowly over 24 hours. Now, you suddenly now have power for only three hours. What are you going to do? The amount of water you apply in 3 hours is just not enough. So what are we doing? We have plans to invest in power ourselves. As I said, in that circular economy, one of the opportunities is to use newer technologies to actually generate more power from the same bagasse that we have. So we have a project that we are looking at, which is called Power Self-Sufficiency, the Power Self-Sufficiency Project. And that self-sufficiency is not just for us, but it's self-sufficiency as a supply chain. So we are looking at ourselves having sufficient power as well as our growers. What are we planning to do? We are looking at an expansion of about 40 megawatts. We currently have 40 megawatts installed. So if we install another 40, we are looking at doubling our power generation. And then part of that will supply our own estate, and hopefully part of that will supply our growers using the open access system that has been created in Zambia, which means you don't limit ZESCO to be the only supplier of power in the country. So that's opened up an opportunity for us to be a player. The other advantage we have is that where we are located, there is plenty of sunshine throughout the year. We have lots of land that's not suitable for growing crops, and that can be converted into solar farms. So we are talking to a lot of solar companies at the moment to look at them coming to invest and produce solar on our farms, and then we can offtake that power. What we are trying to do is not to be everything to everyone, but also to realize that we focus on our core business. Core generation is part of our core business because it's directly a product out of our process. But solar is not our core business. There are people who know how to do solar better than us, but we can be a buyer of their power, and also as part of the collaborative model. So that addresses what we are doing in terms of the power issue that was experienced during the drought. Increasing exports, the question on increasing exports is we are limited by the amount of sugar that we produce at the moment. So the model is, because sugar is a food, basic food, if you go to the Maslow's hierarchy of needs. People, when they wake up, they need to eat, and some people use sugar throughout the day and so on. So you can't just look at it from a financial perspective. But the question on shareholders was a good one, because it also turns out that the domestic market is where we make our most margin. The reason is simply that on the export market, you are exposed to world market sugar. So world market sugar comes from Brazil, Thailand, Australia, EU excess sugars, and so on and what have you. And that sugar is usually produced in subsidized countries, and as a result, they lower the price. And when we export, we actually realize a much lower price simply because of the exposure to the world market. So the focus on the domestic market, when you look at the overall economics of sugar, actually turns out to be the best thing for our shareholders. So you find that sugar industries that have got strong domestic markets are the most profitable because they are not exposed to this subsidized cheap sugar, which really is an unfair and not level playing field. But it is what it is. So yes, we want to increase exports by just increasing the volume of sugar. Our strategic plan is looking at increasing our sugar production from, we are currently at around 400,000 tons. We are looking to increase first to 425, and then later to 450,000 tons, which is our current capacity. Beyond that, we then have to decide whether we want to expand it in Nakambala, or we go and we start an estate somewhere else. That's why I said the future is bright, because the demand is there. We have land, we have water. In Zambia, we have the weather. And if demand is there, then in the future you can expect that we'll continue to invest, and because we'll then produce higher than what the domestic market uses, we'll then increase our exports. What was the other? Pricing. Pricing is determined by what's happening in terms of inflation. I think for you to continue to be able to produce the product that people need, we need to be able to charge a price that that allows us to be able to continue to be viable. But we do that very responsibly, and you can expect us to continue to be responsible when it comes to that.
So my name is Alec Chonda from Stanbic Bank. Indeed, the future is bright for Zambia Sugar, for as long as the supply that you are churning out is met or surpassed by the demand. And the fact that you've alluded to that local sales are more lucrative than the export market. I just want to understand two aspects of today's presentation. The first one being the key reasons why the Tozabuka project has been increased in terms of the cost outlay from 1.72 billion to 2 billion. That's number one. Then secondly, in terms of the structural costs that may linger beyond H1, things like FX volatility and imported inflation on some of the input costs. I'd like to understand if there's a timeline for some initiatives like substituting your imports for things like fertilizer to the local market, and whether Zambia Sugar is considering that to be implemented in the nearest term, or that's also in the medium to long-term plans.
Thank you, Alec. Any more questions? Patrick? Yep.
This one, I'll take it on the media side, since our colleagues from the finance sector have also spoken. I think I heard, if I heard correctly, Mr. Hezron pointed out that we won't see much of ESG in the media. I think it made some of us a little bit sad, because we know that media is usually the platform in which many of these corporate programs are blown far and wide. And I think if we look at how the Zambian media landscape has been over the years, it has been heavily dominated by political and social. But now I think we're having more business-oriented media houses. And if at all we hear from corporates like Zambia Sugar saying they will not take part in media in showing out what they are doing under ESG, it makes us sad, because I think
if I could just interrupt, he didn't necessarily mean it that way. What he meant was that he won't put up a facade. What he meant was that what will happen from the ESG would be real.
Okay.
So it will be in the media.
Okay.
Yeah.
All right then. Okay, because I had heard him say that we will not see it in the media.
You will have to come up and clarify for the sake of anyone else who will have misinterpreted.
To say if at all you accept that.
No.
Yeah. Okay.
Any other question? No.